This is the Future of Finance. Hi, everyone. Welcome back to the Future of Finance podcast. I'm your host, George Dyer, and today we have a fascinating conversation with Heather Beatty, the founder and CEO of ScopeFour Capital. Heather brings a deep understanding of climate-focused investing, and in this episode, we dive into how public markets can drive the transition to a net zero economy. We explore how ScopeFour identifies companies that provide real-world climate solutions, the sectors and technologies most critical for decarbonization, and how investors can allocate capital more effectively. We talk about the two frameworks, Project Drawdown and the Crane tool from the Prime Coalition that Heather uses to identify effective climate solutions. We also talk about the master's program at Duke University that Heather attended to help her make the leap from traditional finance to climate investing. And we tackle some big questions like, are investors moving fast enough? What role do policy and regulation play in this transition? And what misconceptions hold back capital from flowing into climate solutions? So whether you're an investor, a student, or just someone curious about how finance can help solve the climate crisis, this conversation is one you won't want to miss. I hope you enjoy it. Please follow and subscribe and leave a review if you do. And let's dive in. This is the Future of Finance. Heather, welcome to the Future of Finance. Thanks for joining. How are you doing?
Yeah, I'm good. Thanks for having me.
Absolutely. It's great to see you. Where do we find you today?
I'm actually in San Francisco today. So it's
nice.
it's still in California. Not quite as warm as Los Angeles, though, ever.
Right. That's where your base is, down in LA.
That's right. Yeah.
Yeah, excellent. Well, enjoy the Bay Area. Lovely part of the world. Good time of year to be there. And yeah, again, thanks for joining. I'm really excited to talk about your work. And so why don't we just start there? Tell us a little bit about what led you to found ScopeFour Capital. Yeah, what your aims are with the firm.
Yeah, sure. So I've been in the industry for about 20 years. And I started focusing on the intersection of climate or green economy and finance about 5-6 years ago. A lot of institutional clients were asking us about climate risk and then also what the opportunity was. And I got really interested in it. It led me actually to get a master's degree in environmental management at Duke, definitely later on in my career. I launched the Climate Council at my last firm called First Eagle. And then I also began investing my own capital and both public and private market strategies. And particularly in the public sector, I realized a couple different things as I was trying to invest. One, a lot of the strategies that were labeled climate, I felt looked just like the S&P 500 or just like the ACWI. And so I couldn't discern whether or not the strategies were actually climate or what they were doing for climate crisis or how I was investing in it. The second piece is they weren't really science-led or thoughtful about whether the investment had real-world application. And so that's a huge reason why I decided to go back to school, is because I really feel like the investment industry isn't thinking about real-world application oftentimes or the best allocation of capital. And then the third piece is I didn't feel that public market strategies just in general were capturing the opportunity. So the way that I think of climate and climate solutions, which is what we focus on, is that it's a supply-demand issue. And if you think about the demand for lowering greenhouse gas emissions, even with what's going on today politically in the United States, we still have over 140 countries and 5,000 public companies that are committing to net zero or lowering greenhouse gas emissions in some form. And so obviously that means that a ton of capital is continuing to be pushed towards solving that problem in a variety of different sectors globally. And so we invest in the solution or the supply, if you will. And I didn't see that out in the market. And so it led me to launching ScopeFour, which is ultimately what we do.
Gotcha. And yeah, so how does that work in public markets? Like, how do you think about what are climate solutions at public companies?
Yeah, I think it's hard. If you think about the ACWI, obviously, or just general indices, they're generally not built with climate in mind. And we did a lot of research on trying to find a starting point for that, and really couldn't find anything. MSCI does have some, but none of them, in my opinion, truly, again, kind of capture the opportunity. And so we decided to start with two science-led frameworks. Are you familiar with Project Drawdown?
Yeah, but for our listeners, maybe give a quick overview.
Yeah, sure. So it's a science-led organization that identifies 100 climate solutions that, if scaled, would solve the climate crisis. So we used that, and we also used another source called Crane Tool. Now it's called COI. It's through Row Impact.
Hmm.
And if you aggregate all of the climate solutions out there, some of them are more economically viable than others. Some of them are more currently impactful than others. And so we decided to just parse out all the ones that we felt were ready to scale, right? Because ultimately that's what public markets are all about, are scaling economically viable, ready to go innovations for
Hmm.
energy efficiency. And we used an algorithm and we applied it to all of the listed companies out there, about 50,000 listed companies, and we created our own proprietary database or universe of companies that are focused on climate solutions in one way, shape, or form.
Fascinating. So yeah, and just on the drawdown piece for folks who don't know, it's a great book also. So if people
Yes,
haven't
it
checked that
is.
out, it's all captured in a book, all those 100 kind of top solutions. And then on the Crane tool, we actually had a couple of the guys from Row
Oh, that's
Impact on
right.
the show recently. Yeah. And we'll probably have some folks from Prime Coalition on shortly too to
That's
talk about their role
amazing.
with that. Yeah.
Seth
So you've,
is on our climate council, actually.
oh,
So
that's right. Yeah.
yeah.
Nice. Yeah. Seth Sheldon, who's on the show. That's great. So you have this database and you kind of run the algorithm through these 50,000 companies. What does it kind of look like at the end? Because, I mean, you're looking at all types of companies in different sectors, or does it come out with companies that people might traditionally think of as climate solutions like renewable energy or things like that? And how do you think about big companies that are maybe, doing a lot of things like big oil and gas companies that are also investing in renewable energy, or car companies that have, EV lines? How does
Yeah,
that
no,
shake
that's a
out?
really good question. I'll answer the first one. So it is definitely skewed. So we view ourselves as a thematic manager that's uncorrelated to broad-based markets. So if you think about traditional, let's just call it ESG strategies, or even low carbon or climate transition strategies, as I mentioned before, they do look a lot like broad-based markets. And this ends up being really skewed. There's actually only 6% of our universe that overlaps with the ACWI.
Hmm.
Um, so there's a lot of exposure to industrials, for example, if you just think
Okay.
about a climate solution, and I can talk, of course it is absolutely renewable energy. It's the picks and shovels of energy transition. You want to think about resource efficiency, energy efficiency. It's also grid infrastructure and battery storage, things like plant-based diets. What we look at valuation, we look at the financials, but if you're just looking at a broad-based universe, something like an Oatly would definitely be in the universe. And then,
Hmm. That's the oat milk company that's,
yes,
yeah, plant-based.
exactly. Right. So moving away from that type of thing. And then also, commodities oriented things like steel. So recycled steel or low GHG cement. So it's
Mhm.
really across the board, but at the end of the day, we don't have anything in healthcare or financials because it really doesn't correlate to what we think is the supply for this trend. So it is skewed, and
Mhm.
we've done a lot of work also as to what the benefit is of adding it to a broad-based portfolio, just from an information ratio and tracking error standpoint, because
Mhm.
it's such an innovative way to think about how to invest in public markets.
Are the companies all different sizes then, or is there sort of a large cap, small cap, like skew,
Yeah.
or is it?
So for us, it's all cap. It definitely
Mhm.
skews smaller cap, as you can imagine, but we do have larger companies in the universe like an ABB or a Hitachi. And then in that case, they often have, 7 or 8 different climate solutions across the board. And then just to answer your other question around, okay, would we use or would we buy an oil and gas company that's maybe focused on carbon capture and storage? The
Mhm.
answer for us is it's not going to be in our universe because it isn't a climate solution necessarily. But even if it did land in the universe, it would have to be a material part of the company's business for us to own it, right? So at
Mhm.
the end of the day, the question is this company's revenues, capital expenditures, R&D tied to one or more of these climate solutions? Is it focused on battery storage or any of the things that we just talked about? And then will that lead to stock price appreciation? And if not, then it ultimately isn't really capturing the trend that we just discussed. And so we wouldn't include it. So it might be in the universe, but it probably wouldn't be in the portfolio. And it
Hmm.
has to be either, material to the company's business or moving in that direction from a growing revenue standpoint. They're really committed to it.
Yeah, gotcha. Is there sort of a threshold or is that a judgment call? Like, 'cause, you hear people talk about some of the big oil and gas companies and they say, oh, they're the biggest investors in renewable energy, but it's a pretty small percentage of their overall business. So
Right.
yeah, how do you think about that?
We wouldn't invest because it is a pretty small percentage. For
Yeah.
us, for example, carbon capture and storage isn't ready to scale anyway. It isn't currently impactful, so it has to be currently impactful from a lowering GHG standpoint. And what we look at from that measure is something called emission reduction potential.
Hmm.
Yeah, so that it definitely matters. It is more of a judgment call though, but in aggregate, our portfolios have about 80% of their revenues tied to one or more climate solutions. So
Gotcha.
we think that we are one of, if not the most pure play managers to capture
Hmm.
this theme.
Yeah. So it's not like a strict rule, but there's sort of those guidelines that it's a pretty major part of their business.
Exactly.
Yeah. And that the emissions reduction potential is what the crane tool helps measure and think about, right?
Yeah, we have our own way of measuring ERP or emission reduction potential, but we
Hmm.
definitely used Crane Tool and Row to kick off. And Project Drawdown also has its own measure of emission reduction. And happy to just share what exactly that means.
Yeah, that'd be great.
So we're huge proponents of that as an impact measurement tool. And so the idea is if we were to replace, for example, on or offshore wind with oil and gas, what does that equate to through to, let's just say, 2030 or 2050 from a gigatons perspective? And then you can actually model that out and say, okay, if should I focus on that? Let's just say it was replaced by 50%. Would that be more impactful from an emissions reduction standpoint than if I were to say focus on food waste, which is a huge issue from a methane standpoint and contributes about 20% to all of our landfills? How do they compare from an impact standpoint? And then you can apply it to a company and say, okay, what percentage of its revenues are actually focused on wind? And you can say, okay, that's more impactful than food waste, for example, or more impactful than carbon capture and storage. And it's just one mechanism, but it seems to me to be the most valuable one that we have rather than some of the others that are out there.
Hmm. Well, when we're thinking about the transition over years and decades, it's how do we get to how do we avoid those emissions that otherwise would happen without these solutions, right?
And also, what's the most effective allocation of capital, right? I think
Hmm.
a lot of allocators say to themselves, okay, this seems sexy or this seems really innovative, and maybe I'll allocate my capital to the blue economy or to seaweed. And there's nothing wrong with that, but I view allocation toward climate as a continuum. And so, if you have $100, maybe you should put a piece of that towards innovation, but two-thirds of the innovation that we need to solve this problem is already here. And so
Hmm.
ultimately what we need to do is really scale what we have that's proven to be impactful. And you
Right,
can
right.
actually model that out.
That's great. And this comes back to the name, right? Can you just tell us a little bit about the origins of the name Scope 4?
Sure. Yes. So if you were to calculate, if you were in charge of a country or in charge of a company and you wanted to calculate your emissions, is generally a baseline if you have a goal. There are three ways to do it: scope one, two, and three. Scope one is just basically what energy are you using, and you can calculate that. The second is indirect energy, and the third is all about life cycle analysis. So if you were a car company, what minerals do you need to build the car? What emissions does that generate? And then all the way to the car being driven off the lot. Obviously, all of the emissions through the tailpipe, and then how is it disposed of? And so, countries say, okay, these are our emissions in aggregate, and they find that baseline. And then the question is, okay, now what? Obviously, now you have to reduce or avoid the emissions that you're generating, and that's what Scope 4 is. So we actually trademarked that term. It's not an official term,
Mhm.
The first three are part of the GHG protocol. And this one, to me, is also a way to think about climate as an opportunity rather than a cost drain for companies, right? So there's, of course, risk in climate, but then there's this huge opportunity on the other side of that to help companies and countries meet their need. And so that's why it was named that.
Absolutely, that's great. And let's talk about that. I mean, you talked a little bit about how, allocating sort of capital to the highest and best use from an impact perspective of like most quickly and effectively reducing emissions. But how do you think about the financial side of that? I guess both from a risk, but also an opportunity side in terms of, how these types of strategies perform financially.
Yeah, so if you look out, we actually did quite a bit of analysis on this because at this juncture, probably the course of the last 2 years, it really hasn't performed very well relative to broad markets. If you pull that out through to 2019, it does. So we
Hmm.
believe that over a full market cycle, these types of strategies do outperform the broad markets. Now is a time where we think the market is dramatically undervaluing a lot of these companies, probably a lot due to sentiment because forward-looking earnings relative to broad-based markets still looks really attractive coming into 2025, 2026. So at this juncture, this is a extraordinary value play where,
Hmm.
think about Warren Buffett, where people are feeling fearful, this is where you should lean into your greed. So that's a little bit of how we think about it. Also, because it's so uncorrelated, if you were to replace a lot of your growth exposure, let's just say 20% of your growth exposure, you would actually raise your information ratio and lower your volatility. And so we did some work also on, okay, if I wanted to add this to a portfolio, how much should I add? What is it doing to the portfolio? Um,
Hmm.
and so from an absolute standpoint, it also raises your Sharpe.
Hmm. Gotcha. And how, I mean, you mentioned how market conditions can change through this transition, and we know it's not going to be linear, even if the long-term trend is towards decarbonization.
Right.
How do you think about the role that policy and regulation does play, and particularly with this new administration and some of the just kind of political climate around this right now?
We do our best to focus on companies that have free cash flow or very risk focused.
Hmm.
We try to focus on companies that aren't dependent on subsidies or policy to succeed. That said, I think that this particular administration is definitely going to slow down the effort, but not stop it.
Hmm.
And it's interesting in talking with people in the United States versus overseas. This is very much a global issue with a global set of commitments. As we pull back, there are other countries that are pushing forward, like Japan, for example, is actually putting forth double the amount of stimulus that we did here in this country. A lot of people also don't realize that in the first Trump administration, if you look at how renewable energy did relative to traditional energy, it actually 2 to 3x'd it, right? And
Hmm.
production of coal went down fairly dramatically, and renewable energy also beat broad-based markets. So I don't necessarily think that whom whomever is in power is going to stop this transition. It's underway, it's not going anywhere. What I think is going to happen is, and is happening already, is that people just feel uncertain
Hmm.
because there's a lot of confusion around what we're actually allocating to and not. And so I think there might just be some pausing as the dust settles and we get a little bit more comfortable with the volatility that this administration ends up producing because of the uncertainty.
Yeah, and that comes back to your point about maybe a contrarian time to think about it. It also reminds me, I don't know if you've seen Tom Dyer, who's now at Galvanize Climate Solutions, has been putting out some great stuff about just the market forces, as you're saying, and particularly the performance during the first Trump administration. And yeah, we're seeing these trends continue globally. This might be a little bit of an unfair question because nobody really knows what's happening day to day, but do you have a view on kind of the tariffs and how big an impact that might or might not have in terms of some of these solutions?
It definitely feels like it's still evolving and so that's uncertain. If you think about just China and all of the when we talk about picks and shovels, at the end of the day, we're not manufacturing some of what needs to go into each of these solutions, right? If you think about the EV market,
Hmm.
and you think about, wind turbines and solar panels. None of them are really being produced here. They're being produced in areas that there could be tariffs. And
Hmm.
they're not just going from China to the United States. It's all of these parts are moving all over the world before they actually get produced and then shipped back. So there definitely could be implications, especially around how we are experiencing some of these energy transition items. That said, I do still think that grid infrastructure is really important. The demand for power is going to continue to go up, even if AI isn't producing the same amount of power and water that we originally thought through DeepSeek. It's
Hmm.
still the demand for power is exponential, and I do think it needs to be a one or all the above approach to this energy demand. And so I think that even if there are tariffs, some of them might get scaled back as there's some realization around that economically.
Yeah, yeah. And I'm curious too. I mean, I'm always trying to find the silver linings, and I wonder if some of these, I think they'll drive costs up, but they could help shorten supply chains, as you say, and build out more kind of local infrastructure around some of these components and things, which is obviously the point of them to try and keep jobs here. So
I
be
think it's
interesting
going
to
to be
see how it plays
challenging
out.
though.
Yeah, yeah. I think regardless, the cost considerations are going to be serious, but we'll see. I'm curious too. We hear sometimes that there's a lot of interest in these solutions from investors, but not enough or not a fast enough kind of allocation of capital. Are you seeing that, or do you feel like investors are moving, or if they're not, what do you feel like's kind of holding them back from actually allocating capital to these types of climate solution strategies?
Well, I think it's never fast enough, just given the gravity of the amount of money that we actually have to put towards this to meet the Paris Agreement
Hmm.
goals. So currently we're putting over $2 trillion towards solving this problem globally, but it needs to be another $4+ trillion. So I think it's not moving fast enough. And part of the reason we may have seen some pullback more recently is, maybe someone just sort of signed, you know, an agreement and said, okay, what are we doing? Okay, great. Sounds good. And now a lot of these companies are saying, well, how exactly do we need to get there to meet these goals? And it's going to be a lot of capital. I just think that we overshot our ability to meet the capital that's required, but that we're going to continue to put money towards it, and we're beating records all the time, right?
Hmm.
Last year was a record-breaking year towards climate solutions and energy efficiency technologies.
Yeah, yeah,
It's
no,
just not fast enough, right? I think people
yeah.
need to, especially investors, understand what we're even talking about when we talk about climate. I think that piece is confusing.
Absolutely. And on that point, I'd love to hear just a couple of like your sort of top picks, not in terms of companies, but in terms of climate solutions. You mentioned sometimes it's not the common things people think about. You mentioned methane from food waste, for example. But are there two or three like that that you just feel like we need to shine a little more light on and focus on more?
Well, we've been focused a lot on buildings. So
Hmm.
the built environment contributes 40% in aggregate to greenhouse gas emissions. It's not politically charged, and there are a lot of initiatives globally for buildings to be more energy efficient. And so technologies like building automation systems where, let's just say you're in an office, everyone leaves the office, everything's still on. You now have the ability to turn off and be more energy efficient with your electricity. Or smart glass is another really interesting technology that's being implemented in some of these buildings that help with the heat and the cold, in terms of refracting the light. And then also, of course, smart thermostats. I'm sure you have a Nest at home or
Hmm.
something to that effect. So uh, we have been focused a lot on just the built environment in general. I talked a little bit about grid infrastructure, the nuts and bolts around that. It's kind of boring, right? But the cables and the digitization around that. If we can't fix our grid globally, we're not going to be able to plug in any of these renewable projects that have been built. And so there's all of this untapped capacity that's waiting to come online. And so that really needs to happen across the board. I always recommend the book Grid if anyone wants to read about the history of power and how we've gotten to where we are today. It's a really, I think, interesting read about DC versus AC power and
Hmm.
how we built this out over time and why it's such a mess.
Nice. Yeah, I haven't read that one. I'll check it out. And it's great points. I mean, I think sometimes the most impactful solutions are often kind of boring, and also comes back to your point about the existing technology that we have. Sometimes that breakthrough technology is sexy, and I think there's a need for some of that. But there's so
Yeah,
much that we have that we just need to implement right now,
right.
and that's cost effective and can generate good returns. So
I have
that's
actually
that's
one
great.
more,
Yeah.
which is water. We're
Hmm.
getting ready to launch a water strategy. We've been really focused on water, and when I say water, I mean water infrastructure, water technologies. Also, water treatment is huge, and to me, it
Hmm.
goes alongside this green economy story. It's more of an adaptation play rather than a mitigation, meaning obviously, as the climate crisis continues, we're going to have less potable water, and the water is going to be distributed differently. And also with all the pollution around water, we're going to need to figure out how to clean our water properly. And so we're allocating quite a bit to that as well.
Nice. It's a great point. It's often so overlooked. We actually have, I think by the time this comes out, we'll have another episode really focused on water too.
Okay.
Yeah, yeah. Great. Well, Heather, this has been so awesome to learn more about your work and share it with our listeners. As we wrap up, as we ask all our guests, I'd love to hear, kind of given your view and your work in this space, what is your kind of big picture vision for what the future of finance needs to look like and how we get there?
My opinion is every single investor, institutional or individual, should have at least one allocation of climate in their portfolio. They should be thinking about it as a risk measure to offset a lot of their current exposure that they have just in traditional portfolios, and also as a secular growth trend that's going to continue for many decades. So the future of finance incorporates that as part of asset allocation, and acknowledgement that this is one of, if not the most important opportunities and moments of this generation.
I couldn't agree more. And yeah, I think it's going to impact everything. So I think that whole lens needs to be there for sure. And then what about folks who are, interested in charting out a career in this space? What kind of advice would you give people who might, either be coming out of school or just looking to a transition in what they could focus on to find some work here?
Yeah, I would say first of all, it's ever evolving.
Hmm.
And so continue to learn and create community around what it is that we're doing. Also, I found the CFA for climate extraordinarily useful. I did not take it, but our investment team has. And
Hmm.
it focuses on risk and valuation as it relates to climate. And so I think is really salient in terms of how to bridge the gap and think about climate in the investment world. So I would definitely recommend doing that.
That's great. Yeah, very practical advice right there. And actually, it reminds me, I meant to ask you also if you might just share a little more about the program at Duke and give that a little plug and kind of what you got out of
Sure.
it. Yeah.
Yeah, you know what? It was really amazing because I did it online. It was a full 2-year program, but it was
Hmm.
for professionals who are already, mid or down in their career path. So it was people the ages of 30 to 50 and doing all different kinds of things like battery recycling or bioplastics, right? Those are some other climate solutions. And what I got out of it is an interdisciplinary view on everything that we're talking about. The investment piece, I probably brought that to the table for the cohorts, but I also got a sense for, okay, what does this look like from a policy perspective? What are we
Hmm.
talking about when we talk about environmental economics? How are we valuing nature, for example? And
Hmm.
then environmental law. And so how all of these things get put together because this is such a global issue. It's not obviously just an investment issue, and each of the sort of subsectors are thinking about and viewing it in a different way, and also have different vernacular. Uh,
Yeah.
so that's a lot of what I learned, and also maybe one other thing, which is how are I was able to do a deep dive on how different countries are tackling some of their goals. So how do they tackle what they want to do from an emission standpoint with their economics?
That's great. That sounds awesome. Yeah, I went to a master's program in Sweden that had a very similar approach and found the same things, that
Oh, really?
transdisciplinary. Yeah, just how the disciplines can talk, across each other and find that shared language for the ultimate goal of sustainability. And another episode, we actually have the founder of that program who will have been on the show probably by the time this comes out, Carl-Henrik Robert, who started the Natural Step. But that's a lot of what, I think is needed, is how do experts in different silos or different disciplines learn to talk across, because these issues are so systematic and you need that whole systems view. And so you have to work across disciplines to do that. What's the program in the business school? Or
I know it was the Nicholas School for the Environment, but you can actually do a dual master's MBA program, which I think that would be another plug for students trying to do something like this. Is the schools are really different, right? So if it's something that you want to do, I would say to try to do a dual program.
Yeah, excellent. Great. Well, Heather, thank you again. It's always great to catch up, and thanks for all the work you're doing. I hope we get to talk again soon.
Yeah, same here. Thanks for having me. I appreciate it.
You bet. Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.